Hi, everybody. Looks like a couple are still joining, but we will go ahead and get started. Welcome to our webinar today, Personal Budgeting for Business Owners. I am Andy Reynolds, Chief Operating Officer and Partner, here with Cameron Hamilton, our Director of Financial Planning and a partner here at Ballast. We wanted to have a conversation today just a little bit about budgeting and the interconnectedness between personal budgets and business budgets, especially for businesses who may be on the smaller side, medium side, and entities where maybe a sole person or a handful of people are making decisions on both sides. So, just to jump into things, Cameron, do you want to start by just talking about why this is important and what we're seeing in the conversations we're having with clients around this topic?
Yeah, thanks, Andy. And I think it's such a great day to talk about this. It is a beautiful day in Lexington, Kentucky. If you love 50 degrees and rainy, it's the perfect time to be talking about what business owners need to be thinking about when they think about, budgeting and taxes and running their, business and personal side. And, when we think about being a business owner, there are so many benefits to it. You're in charge of the revenue and the expenses, and you really are the captain. The trap, if there is one, is a lot of people become the business and are the business, and they treat that one and the same as their personal finances. And when that trap becomes harmful is if we have a business that maybe is growing, producing more revenue, having some success, and we never really think separately about the individual side and the business side. And we think about, I have more money in the business, I have more revenue, it can continue supporting me. But what we want to ask people as planners is, are we thinking about how reproducible this is if we don't have the business? Or are we thinking about, are these businesses reasonable? Are these expenses reasonable to the business? So, I think the challenge we'll talk about is it doesn't have to be every day and in every circumstance, but thinking occasionally and kind of taking off your business owner hat and putting on your personal hat, or your operator hat. That is someone who's maybe a little bit stricter about what things wind up on the business. Doing those kind of broader planning to make sure things are still in line, or something that is a challenge that not all business owners get around to, because it's hard running a business every day. There's always something else to do than to think about, the minutia of budgeting sometimes.
Yeah, and I think in our family, the B word is always a favorite amongst myself and my wife. I'm obviously being sarcastic. We don't talk as much about a budget as we used to, and I think the same goes, especially for business owners, and especially when you have expenses that could be quantified as both. The simplest example is just a cell phone. A lot of business
Yeah.
owners will run their cell phone through the business, but then they're also using it for personal use, obviously. And so I think when we're trying to think about the goal planning and long-term planning, and thinking about a budget and thinking about sustainability and emergency funds and whatnot, I think it's really hard the more intertwined those are. Once you start adding your vehicle into the business, once you start adding other aspects, you put a spouse into the business, and you have earnings to that spouse and whatnot. So it somewhat becomes, to some degree, a tangled mess when you're trying to figure out, okay, how many of these expenses would have to be replicated if let's say we close down the business and now we're retired and whatnot. So, something that I think is incredibly important around the business and the personal side is just to have a long-term plan of where do we need both entities to function separately, and how do we make that work, and how do we goal plan around the two of those. So, I think in the simplest terms, when we do think about a budget, we want to have variable expenses, fixed expenses, and then some type of emergency fund that falls into that when you think about how you're allocating your money. if you're only doing that from the personal side, you probably are missing the mark from the business side. And if you're relying on some of those funds from both sides, I think it becomes really challenging to do that well from both sides. And I think the more variable the income is, the more challenging that is as well. Trying to create your own personal budget when you're looking at the business at the same time.
Yeah, I think the concept of having separate buffers, or at least buffers, depending on their held, where they're held, maybe that's something we could debate what's best for each person, but having them, kind of allocated to the business and personal, I think that's so important because I'm going through my head thinking of clients we have who are business owners, and we're business owners as well. And how many of those are so correlated when you think about the economic cycle, and when something might go bump and you need that cash. A lot of times when that business is not doing well, your personal side is going to be struggling, one and the same. So if we just have cash over here in the personal account, and it's our personal savings fund, and that's the kids' private school for next summer. And oh, by the way, that's what we're going to need to make payroll, because I took some money out of the business, but it's kind of still there with the thought that it could go back into the business. What happens if those things hit at the same time?
And I think that happens a lot. I mean, you look at COVID, and we work with a lot of dentists, and I think a lot of dentists had a moment there in COVID where it's like, oh my goodness, I am seeing it from both sides. The
Right,
revenue stopped, and now I'm having to figure out how I'm going to keep paying my employees, keep the electric bill paid, keep paying rent, mortgage, or whatnot. But at the same time, I got my own mortgage. I have my own things that I need to be responsible for. And maybe I had this one savings bucket. I didn't anticipate both things happening at the same time. So
right.
I definitely think that happens more often than people maybe give it credit for. Because at some point, something's going to happen that's a
Right.
disruption to your business,
Yeah,
whatever it
and
may.
that goes back to your point about, what's a basic budget? You got fixed expenses and variable expenses, and we all learned that in, high school social studies. But what we an exercise we want to go through with our clients is really, what's my minimum that I need? And most of us live in a time where if we've had some success, and that's continued over time, we're not spending too much time getting into the budget. But really, truly, if we needed to dial down on things, how far could we go for a period of time without making a big change? Like, okay, I have to make a career change. I have to move houses. Something has to give. So, how do you think about that with your clients, Andy?
I mean, really, I look at it as just kind of two different puzzles.
Mm-hmm.
And, let's say that we have an emergency in the household, and whether that's a roof or whether that's, something health expense. And for whatever reason, if we needed more money, how could we define that? And let's put a number around that. And then we do it the same thing on the business side. If all of a sudden we have a slowdown in revenue, I get sick, let's say I'm a practitioner and I have a trade and I only get paid when I work, and I get sick and I'm not working for 3 weeks. I have an injury or whatnot. So, whether that's covered by insurance or whether that's covered by cash, really one of both of those conversations have to be had, because if not, you run into a point where you may have your safety net being utilized twice by two different
Right,
directions, and you're just not fully thinking about that. Um, I think where that can really also happen is with lumpy income.
right,
Um, we have a lot of clients who, whether, they're in the healthcare field or sales or, on commission or, paid by how well a business does. Um, talk about how you've worked with people with lumpy income, because I do think that's also another area where, hey, I'm supposed to get this commission, but my client didn't pay. They're a month behind. I know I'm going to get this money. Or we had a psychiatrist who didn't get paid by insurance for 4 months, and it was no fault of their own. They just didn't
right.
pay. So, how
Right.
do you handle the lumpy income for people and talk about the structure behind that? Because I think our approach works really well.
Yeah, I think the baseline, tenet that everybody needs to understand is you have to have a plan for your cash flow. And so when you are a, 12 or 24 or 26 paychecks a year W-2 person, you're not really in charge of any of that. But to the extent that it's different, and it even could just be maybe looking exactly like that, but you're 1099. And now I also need to plan for taxes. So that's probably the most basic version of that we look at is, we plan forward, we think forward, and then we plan backwards. So, that type of person, we need to have some type of range thought about where our earnings are going to wind up, and then, be setting cash aside for the tax bill. And then just the complication goes up from there, so maybe, 60% of my income is base, and then I get, quality bonuses for a, physician type person or a sales type person. What percentage of your monthly spending can we do on the base wage side? And then how can we match up and think about pre-spending those bonuses and not treating them like funny money? So maybe that type of person, we have life insurance and property tax and retirement contributions. We have plenty of people. How many people, Andy, once or twice a year do we make lump sum retirement contributions? And then, even if maybe we're installing them throughout the year, but kind of matching the expenses to the income, that can be a good thing. The other thing I like to think about is how we think about liquidity. In its most basic form, we have, cash in our checking account that we're watching fluctuate. And then maybe we have a savings account that we can go get cash from, but it's a little bit harder for us. Then what happens after that? Do we have equities over here in a taxable account that we're considering tapping? Do we have, debt that we could go, take money out of a home equity line for a period or a revolving line of credit if the business is cyclical? What's the plan? And, are all those things, when we think through them, is that comfortable, or does something need to change because we realize, wow, I could get over my skis quickly here?
Yeah, definitely, definitely. And I I keep thinking about like this emergency fund comment because we're talking about budgeting, but I think budgeting also does come down to how much risk can you take in your budget? How tight could your budget be? How quickly can you start your budget? We have two quick stories. One was a really fun one to work through. But this client started with cash in the bank. And we said, hey, instead of doing anything with that cash, let's use that as our buffer. And then that is going to be our operating account. That's our business operating account. Now they're
Mm-hmm.
commission based. And you can think of it the same if you're a business owner. Commission based, so we had money dripping into this operating account. And it was really just a cash redeployment account.
Right.
Money came into this account. We deployed monthly money to the IRS. We deployed monthly money to retirement, and then we deployed monthly money to spend to a spending account, to their own personal bank account, their own personal spending account. And they spent out of that. They made that their budget, and they had to live within the means of what that distribution was. So we automated retirement, we automated tax, two things that people tend to do last. We did that first.
Right.
And then we lived off of our budget. The cool part of it, though, was that operating account, when it got to be a certain level, we would go in and to your comment earlier, having it pre-planned, we would say, hey, we're going to take 50% of whatever the number is, and we're going to guilt-free spend that. You're going to go do whatever you want, and we are not going to feel guilty about it. If you want to go buy a Ferrari, go buy a Ferrari. You want to go a European vacation, you want to go to Vegas and put it all on red, like whatever, it doesn't matter,
Mm-hmm.
have fun. And then the other 50% we had allocated to college, we had allocated paying off additional mortgage. And it was just a really easy way to allocate some of their income. Another just real quick example, and a little bit different, is a physician that we work with who's completely 1099, um, completely 1099. And she works for several different hospitals, and she gets money that comes in sporadically throughout the month. Well, she's very disciplined. And for her, we do 3 payrolls a year. So she gets a payroll out. Sometimes we do 4. She gets a payroll out. And of that, we give her money that she can spend off of for the next, 2, 3, 4 months. At the same time, we make a SEP contribution. At the same time, we send money to the state and for federal income taxes. So it's a really easy way to just automate these things. And really, I mean, that's if we can take the human aspect out of budgeting, it makes the budgeting so much more enjoyable. The more we can
Right.
automate and then we can say, hey, here's your money to go spend, I think it makes that such a more palatable word and a more enjoyable manner of doing things.
Yeah, I mean, two takeaways from what you just said. One is, isn't it great when the money in your bank account is money to spend and you don't have to constantly be re-underwriting, well, is this actually tax money that's for the business? When it's in your bank account, it's yours to spend. So really what you did, the gift you gave them was you took the downside of a business owner, which is the lumpiness, and you basically made them W-2, as far as how they're, behaving,
Yeah.
right?
And you think
Um,
back to like not to interrupt, but you think back to like the most simplest time of when you had money. Maybe you were a teenager, maybe you were in college, you had no financial responsibilities or very little. Most of that simplest budgeting was, hey, do I have enough money to go out to eat? Am I going to go to McDonald's or am I going to go to Applebee's?
right,
What can I afford this week? And it's the most simplest way to handle those things.
right. Yeah, it's kind of all disposable.
Yeah,
And so that's what you're the behavior you're setting up there. So that's great.
that's right.
Yeah, I mean the
Let's
other thing is just is what I took away from that is, this is personal, right? And we all need to be honest with ourselves. And that's where, I don't think there's a financial planning textbook that can create the value that we're trying to create here, because you get to know these people so well and you're making something that fits for them. So, Kobe Bryant was famously paid once a year and it worked for him. And I think he was making a lot more than I am personally. But you're talking about someone getting paid 3 times a year, that works for them. On the opposite side, I have people that say, hands up, if the money's in my account, I'm spending it. Maybe I'm even spending more than that because, I have there's a level of comfort with a certain amount on the credit card that I feel okay with. And I know that about myself. I have people that send money out of their paycheck to me and I send it back to them once a year for a vacation. And if that's the type of customization you need, we're here to do it for you. So it's really about matching your behavior up to what works for you.
yeah. So Cam, budgeting is not 100% just about spending and allocating. It's also, if we think about a business owner, you're building a P&L, it's effectively budgeting.
Mm-hmm.
Um, when we change gears just a little bit, when we're looking at people's P&Ls, thinking about a budget, for lack of a better word, for their business, um, what are you talking to clients about as, especially as they're, needing to go get debt to scale and get bigger, or they're looking to sell and somebody else is coming in and looking at their financials, or maybe they're trying to better understand their own financials. I think a great business owner can read a P&L. An average business owner probably struggles with it to some degree.
Right.
So talk a little bit about that and conversations you're having with clients around that.
Yeah, yeah. So, P&L, profit and loss statement, income statement, you basically have your expenses, your income and your expenses, and then your net income, right? And, you know, one thing you said there was getting ready to sell the business, right? And I think every business owner would be served well to occasionally step back and think about their business from the perspective of an acquirer, even if we think this is going to be a multi-generational family business. And the reason that is because it makes us start thinking about the capital decisions we're making in the business, about whether they're actually better for the long-term viability of the business. Because whether your goal is to grow it real big and sell it on a high multiple, or if the goal is to have it be around to provide cash flow for the family for the long time, if you're not actually running the business like a business and you're running it more like a personal piggy bank, that's the reason why we see the stat of many family-owned businesses don't make it past the third generation, because you kind of got someone who did that a little bit more strictly. You have someone who worked with that person, and then oftentimes we have the person who came in and didn't see any of that, and that's when we kind of get in a little bit of trouble. So we're thinking about it from an acquirer's perspective. Part of it is we could have maybe our financials recasted every once in a while and just judge ourselves. So when we say recast, what does that mean? Show a separate P&L of maybe if there's expenses that you feel like are questionable, you know, your child's salary, are they really doing business the value that the business can't get anywhere else, or the personal vehicle or travel that, very reasonably is business, but actually we probably wouldn't be doing if we were an acquirer that was just trying to run this business for profit. Think about what that does to your profitability. And one, you got to ask yourself, is it worth keeping that on the P&L, or is it smart, especially if I'm thinking about gearing up for a sale in the next few years, especially if I'm in that a little bit higher tier where I'm going to start dealing with people less like John down the road and more like a private equity firm. Does it make sense to pull those out and put them on the personal side for a while? So, you think about, do we need to clean it up, or are we okay, kind of justifying, well, clearly, we're going to be making a decision off, EBOC, earnings before owners compensation, and maybe there's add backs. And, people do that all the time with professional businesses. I'm not saying that one or the other is right. It's more about going through the exercise and justifying it to yourself, on a periodic basis.
I did that certified exit planning advisor course, and their big mantra is exit planning is good business planning.
Yeah.
So basically, every business decision you make should be from the mindset of I'm selling my business tomorrow. And, or maybe not tomorrow, but a year from now, 2 years from now. And effectively, it's anything that if I'm trying to drive up my multiple, any decision I make is going to be good for my business, whether I sell or don't sell. So
Right.
I completely agree with that. And I think, it it really, to do that, you got to know your numbers, and you really got to separate. I mean, the more entangled we have, trying to think, I've probably seen 3 or 4 clients who combine their personal and their business bank accounts. It's one account.
Yeah.
And they're like, it's okay. I go through it and I tell my accountant, what's what,
Mhm.
and we figure it out. And I just always come back to that, and I think, that looks really hard. Obviously, you're dealing with a 100-person business. That's a completely different story. But, for these mid to small, 2 to 20 people, 25, 30 people businesses who can make a lot of money, uh,
Mhm.
they tend to have some degree of it being intertwined. So, really trying to position that to where if you were acquiring someone, what would you want it to look like? And then trying to do that for yourself. So,
Right.
a
Yeah,
lot of
another
good.
another extension on that concept. When you think about running it to sell it, whether that's good for you now or in the future, something I like to think about is benchmarking and valuation.
Yeah.
And that doesn't mean that everybody needs to run out and get a business valuation each year. And maybe we used to do it in our personal business uh, more often years ago. And as we kind of got used to those numbers, we felt like it was less necessary to go get a third party to do it. But the exercise there is knowing what creates value in the business from the buyer's perspective, and being able to focus on that because we all know, what you measure is what you improve. And, benchmarking the same, so that's more about top line, revenue and profit. But then, what are we spending on human capital? What are we spending on, the actual inputs to our widgets? I talked to a dentist that, had a relationship with a supplier that was a big part of their P&L. And they just said for a year, you know what? Instead of the office manager just blindly paying bills to the dental supplier, I'm going to go look on a competitor's website each time. And that was, they said just like 5 minutes over lunch, swapping expenses over. And, the net outcome of that was, I want to say like $75,000-$100,000 in a year. And their friend said, man, that sounds like you wasted so much time doing that. And it's like, their response was, well, it's 5 minutes over lunch, every day for a year, not worth 100 grand to you. So I thought it was a great point of just, doing a little bit of personal benchmarking. How often do we actually take the budgeting back down to zero and kind of justify things? Not very often for most of us because we have fires that come up every day and we got other things to worry about. But that's the value of doing it is now that profit margin is up, which means that multiple would be up. So that might not actually be an $80,000 thing. That might be a $300,000 or $400,000, net worth value. If you think about it from that perspective, it's a little bit more motivating.
Yeah, and I think to that comment of going back to zero and justifying every single expense, whether that's on your personal side or your business side, what a great exercise. I mean, there's fluff everywhere. I mean, there's now apps that unsubscribe you to monthly subscriptions that you're
Right.
paying. So clearly, whether it's something as trivial as that, or whether it's a line item of a marketing thing that you're doing and you're paying 5,000 a month and you realize you're only getting, $10,000 a year in revenue. It's such an important thing to do across the board. So Cam, as we wrap up today, what do you think if we were to look at best practices across, again, title is personal budgeting for business owners. If we think
Yeah.
about budgeting, individual side, business side, the how they're intertwined, how would you wrap us up with best practices and takeaways from
Right.
today?
Yeah. I mean, we all acknowledge that there's some overlap, but everybody needs to have an understanding of the two as separate entities and occasionally do some goal planning for both of those, right? Definitely a best practice from that perspective is, having your bases covered, on, buffers, emergency funds, whatever you want to call that separately is a good idea. Benchmarking and valuation, just trying to improve the business as an owner getting ready to be acquired, I think is a great mindset. Also recasting the financials is good for that. And then I think also, as we think about someone who's more transitioning to getting out of the business, we need to do some serious goal planning, not the month before we tee up for sale, right? This needs to be a process that's ideally years out. And something we didn't talk about, but I think it's a huge best practice is I call it putting yourself on training wheels, right? So, imagine we're going to sell it for some amount. And imagine we think about that amount being able to create some amount of income for us. And maybe we have this thought of, here's what I actually feel like I spend. Just put that amount of money in your bank account every month, like you were talking about setting up that person's pay from a lumpy income. Are you actually living on, say 15,000 a month, or is it more like 20 or 30? That definitely changes the calculus. And we can go ahead and do that before we sell the business. What we don't want to do is sell it for one number and realize, well, actually, we had a lot more wrapped up in the business. And, so those are the things we love doing for people. I think so many people think about advisors, we're spending our time managing portfolios, and that's definitely a big focus for us. But I get really excited, Andy, about doing that custom work because that's where you really move the needle for somebody. So I just
Right.
encourage people, if you have questions about this type of business planning, we're owners, we work with a lot of owners, and we love putting that, thought process to new cases.
That's right. Well, thank you all for joining us for today. I hope you guys are enjoying these series of webinars. We do them about once a month. If you guys have any other ideas of things we could talk about, please don't hesitate to reach out. And obviously, if there's anything we can do for you, your family, those who you care about, please don't hesitate to reach out.